All right, future CPAs, you're going to want to pay close attention to this one. We're about to crack the code on something that, let's be real, trips a lot of people up: reconciling reciprocal accounts. But forget everything you think you know about boring debits and credits. Seriously, today, you're not a student, you're a detective, and we've got a financial mystery to solve. You ready? Let's get into it.
So, get this. The home office looks at its books and says, yep, we've got a 55,000 peso investment in our branch. Cool. But then you walk over to the branch and they're like, no, we only owe the home office about 49,000. Wait, what? Those numbers are supposed to be identical. So what happened to the other 6 grand? Did it just vanish? That's the puzzle we're piecing together today. Okay, so the first thing you absolutely have to get is how these two accounts are supposed to play together. You've got the investment in branch account on the home office side and the home office current account on the branch side. Think of them as a perfect mirror, literally. If the home office does something to increase its investment, a debit, the branch's account should reflect that exact same increase with a credit. They move in perfect sync. One zigs, the other zags. It's a perfect reflection, or at least it's supposed to be.
This text conversation analogy, it's gold. Seriously, this is all you need to remember. Imagine the home office sends a text. Hey, just shipped you 5K worth of stuff. They hit send, so it's in their records. But the branch hasn't gotten the delivery yet, so for them, the message is still showing as delivering. They haven't seen it, they can't mark it as read. Our job as financial detectives is to find all those texts that were sent but not received and get both chat histories to match up perfectly.
So, every detective needs a case, right? Well, here's ours. We're looking at the books of Grace Company, and trust me, their home office and branch are telling two very different stories. Let's open up this case file and see what's going on.
Okay, check this out. This is our crime scene. As of December 31st, the home office is adamant their investment is 55,500 pesos. But the branch? Their books show only 49,180. That's a pretty big gap. We're talking more than 6,000 pesos that are just MIA. Our job is to figure out where it went.
All right, in any good mystery, you've got to line up the usual suspects. And in the world of accounting reconciliation, the culprits are almost always the same old troublemakers. So, let's meet the crew.
And here they are. Basically, our suspects run in two main gangs. First up, you've got the timing differences. These are the sneaky ones. Think of stuff that's literally on a truck or in the mail when we close the books. The sender knows it's gone, but the receiver doesn't have it yet. It's all about timing. Then you have the second gang, book errors. These guys aren't sneaky, they're just clumsy. Simple mistakes. Someone fat-fingered a number, put a debit where a credit should be. You know the drill. It happens to the best of us.
Now, to hunt down these culprits and figure out what's what, we need the right tool for the job. And in our detective kit, that tool is called the adjusted balance method. Think of it as our systematic process for examining every single piece of evidence, so nothing slips through the cracks.
And here's the most important part about this method. We're not just trying to match these two numbers together to make them equal. Nope. The goal is to find the one true number that both accounts should show if everything was perfect. We're going to adjust both sides of the story until they meet in the middle, at the actual truth.
Okay, team, we've got our case file, we know our suspects, and we've got our tool. Let's do this. Time to start digging through the evidence, clue by clue.
So here's our investigation board. Up top, we've got the two conflicting stories, the numbers we started with. Our mission is to fill in the blanks. With every clue we uncover, we'll make an adjustment on this board, and you'll see those two question marks get closer and closer to becoming the exact same number.
Okay, clue number 1 is on the table. It turns out the home office shipped out a batch of merchandise worth 5,800 pesos, but on December 31st, that shipment is still on a truck somewhere on the highway. So the home office has it on their books as sent, but the branch, well, they haven't seen a thing.
So put on your detective hat. Who needs to update their books here? The person who sent the package or the person who hasn't gotten it yet? Right, it's the receiver, the branch. They can't record what they don't have. So their books are the ones that need the adjustment. Let's update the board.
So boom, we add that 5,800 pesos to the branch's side of the board. They need to account for those goods that are on the way. And look at that. Just with one clue, those balances are way closer than before. We're definitely getting somewhere.
Okay, the plot thickens. We've just uncovered 2 more clues. First, there's a 2,000 peso check in the mail sent from the branch to the home office. And second, the branch collected 560 pesos for a home office receivable, but they kinda forgot to mention it. Whoops.
All right, back to the board. Let's break this down. First, that 560 peso collection. The branch knows about it, but the home office is totally in the dark, so we've got to adjust the home office's books. Next, that 2,000 in cash is in transit. The branch already recorded sending it, but the home office hasn't received it yet, so we need to add it to their books to catch up. Whoa, look at the numbers now. They're actually further apart. Don't panic. This happens all the time in an investigation. It just means we haven't found the key piece of evidence yet.
Aha! And here we go. We found our first straight-up error. It looks like someone at the home office got a little trigger-happy and recorded the branch's net income as 840 pesos when the real number was only 480. This isn't a timing thing. This is just a classic oops moment.
Now, the rule for errors is super simple. You messed it up, you fix it. The home office made the mistake, so the correction goes on their books. The difference between 840 and 480 is 360 pesos. They overstated the income, so we need to subtract that 360 from their side. Let's get that on the board and see where we are.
Okay, we're almost there. We're in the home stretch. We've just found the last batch of clues. Some returned supplies, a weird equipment purchase, and a customer payment that got sent to the wrong place. These have to be the final pieces of the puzzle. Let's see if they make everything click into place.
All right, let's plug these last items in. The supplies returned to the home office. That reduces the HO's investment by 220. The equipment the branch bought, that was for the whole company, so it actually increases the HO's investment by 1,500. And that customer who paid the wrong office, we need to fix that on the branch's side, so we'll deduct 1,000 pesos there. And now, the moment we've been waiting for. Look at that, 55,980 on both sides. A perfect match. We did it.
And there you have it. That's the magic number, 55,980. That's the real, true balance. This is the number that makes both stories line up. Mystery solved. Case closed.
Look, solving one problem is cool, but you need to be able to solve any reconciliation problem they throw at you, especially when you're sitting for the CPA exam. So how do we make this stick? How do we burn this into your brain so you still remember it 3 years from now? It's time for a little software update. Let's get to the pro study hacks.
This right here is your ultimate cheat code, your 3-year retention hack. Just lock in these 3 simple rules. 1. Anything in transit, goods, cash, whatever, always affects the receiver. They're the one who doesn't have it yet. 2. Any unrecorded item affects the unaware party. You have to update the person who's out of the loop. And 3. Errors are the easiest. They get fixed by the person who made the mistake. That's it. In transit affects the receiver. Unrecorded affects the unaware. Errors affect the mistake maker. And your final check, the balances have to match. If they don't, you missed a clue.
See, when you break it down like this, you're not just memorizing rules from a textbook. You're learning how to think like a detective. You're learning how to find the single truth hidden inside 2 different stories. You've officially cracked the code on reciprocal accounts. So the only question left is, what financial mystery are you ready to solve next?